Welcome to the Achievement Apex podcast, the podcast where I share my knowledge and experience on trading psychology, strategy, risk management, and everything else that you need to know to take your trading to the next level. I'm your host, Brendan Murphy, and without further ado, let's get ready to learn something new that you can use to improve your trading results. All right, today's episode of the podcast is all about how you can deal with overtrading, the emotions that cause overtrading, what it looks like in your trading, and as well as the different ways and things you can do to deal with it so that you can stop it having a negative impact on your trading in the future. So to start off with, first of all, what exactly is overtrading? Because we know that overtrading obviously is trading more than you should, but more specifically, it's trading so much that your edge becomes eroded. So when we trade to make profit, we need to have an edge. And that means, so for example, an edge might be our system allows us to get a win rate of more than 50%. So therefore we win more than we lose. Or your edge might be, my system allows me to win $60 and only lose 40 per trade. So then every trade, I'm up $20. Basically anything that gives you a slight boost in performance over everyone else on the default, losing pathway, that's your edge. And when you have a system with an edge and you follow that specifically, you will be profitable in the future. But when you start to ignore some of the rules of your strategy because you're bored, then your edge becomes eroded and then you lose it altogether. And from there you start losing money because you were overtrading. So there are 6 main reasons for overtrading. The first is you have an unrealistic expectation of market volatility. A more volatile market equals more potential to make money. So if you have a market that's sort of moving a little bit, your potential to make a lot of money there is really low. If you have a market that's doing big ups and big downs, if you can buy in at the bottom of one of those downs and then sell at the top of one of the ups, that's a huge profit you've just made. So a market that is more volatile will allow you to make more money provided you have a good quality edge. Well, if you have an unrealistic expectation of volatility and it is just going sideways with small moves and you're saying, it's gonna go up soon, I know it will, it's not volatile, it's gonna go up, so I'm gonna buy. Then you're just rationalizing a bad decision because it's clear the market's telling you, hey, there's not much volatility now, it's a bad time to trade, but you place the trade anyway, even though it's low volatility, and you expect it to win and make money. And obviously it doesn't because the market is not volatile. And so that's one of the problems that can lead to overtrading. And we can branch that mistake under lack of skill because you didn't have enough skill to properly identify the way the market's moving right now. The second reason that could cause overtrading is an overestimation of your trading skill. So if you've been trading for 1 month, that's not much time. You can't possibly know everything about the market. You can't possibly predict with accuracy where it's going just by looking at the price. You can be lucky and guess right. You can be lucky and guess right many times, but you can't predict with accuracy repeatably, consistently when you've only got 1 month looking at the charts. And so when you overestimate your trading skills, it's like, okay, I'm better than I am. Maybe it's not volatile, but I know damn well that's going to go up because I'm a good trader. I've studied, whatnot. You enter the trade and you lose. And it's all because you thought you were more skilled than you are. And this comes under overconfidence. So right now we've got lack of skill and overconfidence. The third reason you might be overtrading is due to the preconceived notion of more work equals more pay. So and this is especially true for most people, if we'll say work normal jobs, they work their 9 to 5, and if they work overtime, they get paid more. Basically, most of society works more, they get paid more. And that kind of belief has probably been instilled in you from a very young age, from your parents, from your teachers, from your friends, from your friends of friends, from your parents' friends. Basically, everyone believes that, and from a young age, you've been taught that if I work more, I get paid more. And when you bring this belief into the market, you think, okay, so if placing a trade is working, having open trades is working, well, if I work more, I get paid more. So let's open more trades, and when I close them, quickly open another trade. If I always have a position open, I'm always working and always getting paid. And this falls under the umbrella of inaccurate beliefs. So when you're trading, right, having no positions open and waiting for the right trade, that is working. Seeing a trade opportunity, checking it with your strategy and saying, no, it doesn't fit, so I'm not taking a trade, that's working. And that is the working that pays you. You need to switch your belief from having a position open to working to analyzing the market and picking only the best opportunities as working. And when you do that, then working harder and working smarter and working more will pay more, because you've broadened your belief from working as open trades to working as analyzing the market and not taking bad trades. The fourth reason that you could be overtrading is due to boredom. When you have no trades open and you're just watching the market tick along, it's like, well, this is pretty boring. I could be playing video games right now. I could be hanging out with friends. It's doing nothing. This is so boring. Or I could open a trade because that's fun. And that's what a lot of people do, especially beginner traders. Because when you first learn something, you do it all the time. Like, for example, if you're playing a sport like soccer and you learn a new trick with the ball, you do that trick all the time because it's hell fun to do. And in the market, you come up with a new strategy, you get a win from it, and so okay, so doing this equals a win. This is fun. I just made money. Let's do more of that, more of that, more of that, more of that. Keep it fun, keep it entertaining. And so by trying to keep it fun all the time and not realizing you should be hands off when it's a bad opportunity, you end up overtrading and losing money because of boredom. The fifth reason that you could be overtrading is because of greed. So kind of similar to the common work ethic thing is you just want more money and say, well, if trades make me money, I want more money, I'm going to make more trades. And when you trade with greed, you're going to start taking bad trades, which is overtrading because your edge has been eroded, and from there you're going to lose money. And then the last reason that you could be overtrading is because of spite, also known as revenge trading. So let's say you take a trade that did align with your strategy, it was a good entry, however the result was not favorable. You lost some money. So from here, you're like, or you get angry and you're like, I'm going to get the market back. Next position, I'm doubling down, I'm making my money back and some more. And you lose. Repeat it with 4 times the position size. Lose. Repeat with 8 times the position size. You should have stopped at that first loss. Now instead, you've lost once, you doubled your position size, so now you lost 3 times. You doubled it again, so now you've lost like 8, 9 times. Then you doubled it again, so now you've lost like 20 times from 4 trades, when you could have just taken the 1 loss and been okay. And revenge trading, or trading in spite, is like, that is the most dangerous form of overtrading, because it's not just accruing 1 loss, 1 loss, 1 loss, it's 1, 2, 4, 8, 16 losses, and that's a very quick way to wipe out your account. So those are the 6 reasons that we tend to overtrade. Now we're going to move on to what it actually looks like when you're overtrading. So you have one of these 6 reasons and you make the decision that you're going to overtrade. And the first thing it can look like is taking trades that don't align with your strategy. So for example, for your strategy, it is moving average needs to point up and RSI needs to be below 25. When that's good, then I take a trade. Okay, so what if the RSI is 26 and you say, well, moving average pointing up, it's 26, it's basically 25 anyway, let's take the trade, it'll probably work out. But when you do this and it doesn't align with your strategy, your average win becomes compromised, your average loss becomes higher, your win probability becomes lower, and therefore you start losing. Even violating your strategy by that 1 point on the RSI is a big enough change to completely erode your edge. The second thing is it could be revenge trading, and I just completely explained that before. Taking a position, losing, doubling down, losing, doubling down, and wiping out your account like that. That's the worst way to go, because when you do it, you feel like an absolute idiot afterwards. The third thing that overtrading could look like is trading instruments you have no experience in. So for example, your strategy is made for crude oil, and you know that when you enter an RSI below 25, the moving average is pointing up. Over time, this will result in profit. And it's a boring day, the market's slow, you're like, all right, it's not very volatile, so I'm going to move on to another instrument. And you put your strategy on wheat. So now you're trading wheat with your oil strategy. You have no experience in wheat. You don't know what really causes the ups and the downs in the short term, and it's kind of like jumping into the deep end of the pool when you don't know how to swim. So you're taking all these trades on wheat that you shouldn't have been taking anyway because you trade oil, and you have no edge because you have no idea what wheat does, and so you lose money. The fifth way you could be overtrading is trading when you've hit your profit or loss limit for the day. So if you have rules and it's basically like, okay, if I lose $1,000 today, I stop trading. Because if I lose $1,000, the market's telling me, hey, today's not your day, you're not making good decisions, take a break, come back tomorrow and try again. If I've lost $1,000 and I'm like, no, I know I can win, I can make the 1,000 back. First of all, you're violating your rule because you said if I lose 1,000, I stop trading. Second, it sounds like you're going to be doing some revenge trading, and we've just talked about how dangerous that is. And the other thing is, if you set a profit limit for the day. Okay, so if I hit $1,000 profit today, I'm hands off because that is a damn good above average day. I should take that big win. What if I hit $1,000, I get overconfident, which is another one of those causes for overtrading, and suddenly I start doubling down because I think I'm going to win more, or I start taking more trades because I'm like, yeah, the market's telling me I'm on a roll, and then I just blow that $1,000 and I'm back at square one. Then you might revenge trade to try to get your profit back and lose it all. And the last way you could be overtrading is by increasing position sizes. So if your default position size is 1 unit and you take 2 units, that's essentially placing 2 trades instead of 1. And that is one of the fastest ways to blow up your account. If you've calculated that you can accept the risk of 1 unit per trade and you start doing 2, you've just doubled your risk. Or you do 3, you've tripled your risk. That's a big change. And it might seem like just 1 unit, but you're violating your strategy, you're overtrading, your position size is too large, you could lose big and then turn into revenge trading. It's like a chain of events that just lead to ruin. So we know what causes overtrading, we know what overtrading looks like, but how do we actually overcome it so that we don't suffer from the effects of it in our trading? The first thing you need to do is recognize that you're actually overtrading, because a lot of people overtrade and then they rationalize their decisions so that they don't think they're overtrading. So for example, with that moving average and RSI example, if I took the trade at RSI 26, okay, well I'm going to change my strategy to include RSI 26 now. So therefore it's working with the strategy, therefore I'm not overtrading. And that's just lying to yourself. You need to be very honest with yourself and realize, okay, I am overtrading and something does need to be done about this if I want to be profitable. Step 2 is recognizing that the overtrading is actually killing your performance. It's not enough to say, yeah, I'm overtrading, but it's fun and it's not really having a negative impact. I've still got money. No, you're lying to yourself. I'm overtrading, and if I stop overtrading, my performance would be better. Therefore, by overtrading, I'm killing my performance. The third thing you can do is keep a trading journal and performance statistics. So track every trade you make. Track what kind of emotions you're feeling when you make the trade. Keep a record of your average win, your average loss, your win percentage, your expectancy, which I've explained in one of my previous videos. It's a very important video. If you don't understand expectancy, please watch it because it is the #1 formula for determining whether you're successful in the market. And then once you have all of these statistics, you need to create a strategy or a set of rules that are based on your performance. So all of these statistics, you can get really fine-tuned with it. You can get like, okay, hours of the day that I'm most profitable, days of the week I'm most profitable, months of the year I'm most profitable. So then you'll say, okay, I trade best on this instrument, so therefore I'm only going to trade on this instrument. I trade best during these hours, I'm only going to trade these hours. I trade terribly in February, so it's hands off in February. And have complete rules based on your performance so that you're getting the biggest possible edge you can. When you have the data that says you suck in February, trading in February is going to erode your edge and kill your performance. Once you have this strategy that you've made based on your performance, write down all of your rules and most importantly, stick to it. Write down your rules, especially for entering a trade like RSI below 25, moving average pointing up, and have check boxes on a physical piece of paper. When you're about to place a trade, tick them off one by one. Once everything is ticked, then enter the trade, because you know that once you've done that, you're getting a good entry. It aligns with your statistics of when you trade well, and you're getting a good edge over the market. So therefore, you repeat these decisions over time and you'll make money. If you're overtrading because of boredom, the solution is not to trade more to alleviate that boredom. You need to find something outside of trading that cures that boredom. If you like playing video games, if you're feeling bored trading, the market's moving slow, alright, I'm taking a break, I'm going to play some video games because they're fun. I'm getting my fun from somewhere other than trading, because when you trade for fun, you erode your edge and lose money. And losing money is not fun, even though the trading is. So it might be fun and then you're going to regret it later. Playing video games is fun and you don't regret it because you had fun and you didn't lose money. That's a win-win. Hell yeah. If you're overtrading because of greed and you want to gamble your money and just take dumb trades that don't align with your strategy, something you can do is, in trading, make yourself a second account, or it could be paper trading or it could be real money, but put a tiny amount of money into it. So if you have $5,000, put like $50 in there. If you have $50,000, put $500 in there. Make it a small percentage of your capital, but basically whenever you're wanting to gamble and just go all in on a stupid position, hop into your fun account and go all in there, where the consequences are minuscule compared to if you did it with your real account. That's going to scratch that itch of wanting to gamble and be stupid in the market without putting all of your money in there. And in that fun account, don't have any rules. Just watch the price. Yeah, that looks good. Sick. I'm buying there. I'm shorting there with 10 to 1 leverage. I'm putting all my money in. And if it goes bad, well, you lost $50. Not that big deal, but you have scratched that itch of wanting to gamble your money. So there you go. It was a good decision because, yeah, you lost $50, but you didn't lose $5,000. So that's a win. The next thing you need to do to kill overtrading is to treat trading like a job. If it's a job, you're going to take it seriously. Show up at certain hours of the day that you know you trade well. Have a pre-trade routine, you tick off all the boxes. Have a certain amount of capital that you allocate to each trade. Follow your rules. Do your research. And basically have a routine for everything involved in your trading. It might sound silly, but put on professional clothes for work. When I first started trading about 4 years ago, I quickly discovered that treating it as a job improves performance. And that was when I started wearing suits. I was trading in my bedroom living with my parents and I was putting on a suit to trade. The other thing you can do is treat your money like it's someone else's money. If someone gives you, hey, I'm giving you $5,000 to trade for me, you're gonna be like, okay, I'm gonna do good by my friend. I'm not gonna gamble his money, because if I lost his money, I would feel terrible. It feels a lot worse to let someone else down than to let yourself down. Because when you let yourself down, no one else knows. When you let someone else down, you know, he knows, he might tell other people and ruin your relationship with them. The consequences are far worse for letting someone else down. So if you treat it like a job and you treat it like it's someone else's money, you're going to be a lot more careful with it and you're going to make a lot better decisions. The next thing you can do is don't micromanage your trades. So for example, you have your strategy. It says buy here, set the stop loss here, set the take profit here, and leave it. If you start moving your take profit and you move your stop loss down or up and then you increase your position size halfway through the trade, all these little adjustments you're doing, one, is ruining your strategy because now you're not following it. That automatically erodes your edge. But you're also overtrading by making all these tiny moves, scaling in and scaling out when you're not supposed to be. And lastly, you need to respect all of these rules and limits you've created and follow it no matter what. Make a promise with yourself that you will follow it when you're feeling emotional and you might not be thinking clearly. If you have that commitment that you've written down, you're more likely to stick to it than just making rules and then ignoring them when push comes to shove. And this is the most important one too. You need to stick to any limits you impose on yourself. So if that's, you make this much profit in a day, stop. You lose this much in a day, stop. You trade best from 12 to 3, don't trade at 11, don't trade at 4. Yeah, it's just 1 hour, but your statistics show that that's when you're the most profitable. So respect every single limit and rule that you set for yourself. If your rule is put on a suit before you trade, don't trade without wearing that suit, because that's ruining your strategy. Might sound silly, but it really is important because that small change can compound into the future to represent a big thing. So, that is all the tips I have for improving overtrading, how to alleviate it. I hope you learned something valuable that you can implement into your trading. And yeah, thanks for watching. I'll see you in the next episode.